Hello, welcome to my channel again. Today I'm going to present to you another income stream generation that potentially can get up to like annualized yield up to more than 50%. In fact, a trade like this in 2022 in a bear market actually has been uh, the win rate has been over 100%. Okay, without further ado, here's the presentation I'm going to give you to show you how you can do that. So now if you look at for example, like the WIX future and the term, and what I'm showing you here is the term structure from February all the way to November, which is about 12 years progression of the expected value of WIX, and you can see that it's going to be go from like around 20 uh, all the way up to like 24 and a half. So that is the expected value. Uh, and so if we kind of use it as some kind of guidelines uh, to set up a trade, what that really means is okay. If you look at the wicks for the last 2 years, basically the lowest is within the range of like 14 to 17, and the highest to about 35 to 39. Except of course during the COVID, I think it kind of spike up to a really high value. So usually for situation like that, you don't want to set up a trade for using this methodology that I present here. That will be a different kind of trade that you want to do if for a case like that, or even not to do a trade at all. So so with the uh, WIX future structure that we have looked at, and knowing the at least the expected value of what the WIX will be. So here's the potential maybe a asymmetric iron condor structure that we can set up to get income. For example, in this case, I have a WIX probability curve showing here that we can sell a, a put spread with short strike at 17, and then they give you 25 cents in credit, and the short put delta is minus zero point 0.1 here. And so likewise, we can set up knowing that perhaps you can spike quite high, so we can sell the cost spread with up to like two standard deviation, uh, so that we can have some extra margin of safety. So in this case, the short call delta is a 0.23, and then we try to control the risk using a long call strike, which is 37.5 coin. And so by setting up a trade like that, before accounting for uh, the commission, actually we'll get about 60 cents for this trade for the March expiration date. So if I look at the wick structure curve, the chart here, so basically you can see that we have a pretty far uh, uh, both for the short put strike and also the short call strikes uh, that we set up for this trade. So here's the potential return, right? So the capital for one contract, which is 100 shares of WIX, so it is the capital required will be equal to 37.5 minus $31 minus the credit received. And for one contract, we will have to spend $590. Now the return on expiration in $58 is equal to, if we let it expire worthless, will be like close to 10%. So you try to annualize that number, so that will give you like up to like 63%, right? So the trade, of course, if we try to minimize the risk, the investor and the income investor can perhaps close the trade before expiration, when each leg can be bought back with maybe 50 half a cent, 5 cents, and then open a new trade again for the next trading month. So normally you can really do this trade with almost no management. But just in case if there's something like the wicks has gone too far in one particular direction, for example, when the wicks starts to spike up with the short call delta going above 0.35, in other words, is the delta getting increased in the call side, then perhaps we can roll up the short put spread to make the entire trade's net delta close to zero, or roll down the long call strike to reduce the number of short call spread as well. So this is some of the risk management technique that I will share with you in the future regarding the using some examples. So by doing that, perhaps we can then exit this trade with 15 to 20 days to expiration. Most likely you will be able to scratch the trade, meaning that at that time you may not even you don't lose money, but you don't make money either. And then you can reopen the trade within the next using the next month expiration. Now with this trade, actually in 2022, what I find out is the VIX has been within a range, just like what I showed you in the earlier graph, like here. And so what that really means is all the VIX asymmetric iron condor trades that I show here has 100% win rate and almost have no need to do any adjustment. Maybe once in a while you want to have to make some minor adjustment to maximize the profit. So there you go, guys. I mean, this is one of the methods that actually for 2022, besides the fact that you perhaps can short a lot of stocks to make money, for little or no management, this is one of the ways for anybody to generate a lot of income, especially for retirees. They don't have much time to manage. So if you like this video, I will appreciate that you can click like and subscribe to my channel. And perhaps you can click the bell button so that you will get notified whenever I post a new video. Thank you very much and have a nice day.